Good morning and welcome to One Asia. This is our first time attending as the Lumina Group. We have several public companies, but the one I'm going to mostly talk about today is Lumina Gold. It's got the largest primary gold asset in Ecuador called Cangrejos, and we've been working there since about 2014. I'm going to make some forward-looking statements today, but I'll leave that for you guys to read later. First, let me start by talking about the group. So the group was founded in 2003 by Ross Beatty, Marshall Koval, and Leo Hathaway. Marshall's currently our CEO. Leo's currently our head geologist. Ross is our largest shareholder. We've all worked across these different companies and worked to generate shareholder value through de-risking and then monetizing. So all 7 of these companies you see on this page have been sold. We raised about $275 million of equity and returned $1.6 billion to shareholders. And we hope to continue that strategy with the public companies we're currently working with. So let's talk about Cangrejos. Cangrejos in Lumina Gold is the largest primary gold deposit in Ecuador. We have about 17.1 million ounces of gold between inferred and indicated. This makes Cangrejos a top 15 global gold development project. This year we updated our 2020 PEA study, which was follow along to the 2018 economic study we did. And this brought in an extra satellite pit as well as expansion drilling that we had completed over the last couple of years. So the main thing that happened was the mine life went from 16 years to 25 years. Production stayed around the same at about 370,000 ounces a year. It's still a low-cost asset when you net off the copper byproducts at about $600 an ounce, all in sustaining cost. The asset's about 80% gold and 20% copper. So you can see at $1,400 gold, they had about a $1.6 billion NPV, and at $1,680 gold, it has about a $2.5 billion NPV. The project has great infrastructure, and I'll show you that in a little bit. So, reason to buy Lumina Gold. I mean, from our perspective, it's incredibly cheap. And, I think this slide is the clearest way to demonstrate that. In January 2017, we had a 4 million ounce resource. Gold was trading around $1,200 an ounce, and we had just under a $200 million US market cap. Fast forward to 2020, we've done 2 studies to de-risk the project. Gold's at $1,940 an ounce when this slide was priced. Our resource has increased, 4x. So we're now gone from 4 million ounces to 17.1 million ounces of gold. Meanwhile, our market cap's only about 50% during that period of time. So we think this is a great opportunity for people to come in and buy an undervalued stock. Corporate overview where we're sitting right now. Our market cap's about $326 million Canadian. We have about $2 million US on the balance sheet. As I mentioned, Ross Beatty's the largest shareholder. He holds about 20% in the company. Management also holds just under 10% of the company. So between Ross and the rest of the Lumina Group, we own about 30% of the company. There's a couple other large shareholders in there, but these are supportive people that have been working with the company since about it was founded in 2014 for the most part. Ecuador. This is a emerging mining jurisdiction. I think it's really important to understand that since they started to open up in 2014, there's been a ton of work done to bring forward the mining sector. The main thing that happened is in 2016, they opened up the concession system, which brought in a rush of new companies to look in this last kind of unexplored area of South America. We've seen all the major copper companies come in. We've seen the government reduce the royalty rate, eliminate the windfall tax, and do a lot of things required to encourage mine development there. In our sister company, Luminex Resources, we've partnered with BHP and Anglo American in country, and you can see on this slide a variety of other large-scale companies that are working there right now. And we think it's going to continue to improve. We've now seen 2 large-scale mines get built in the country, being Mirador and Fruta del Norte. So between about them, there's about $2.5 billion of capex that's been invested. Cangrejos, let's go back and talk about where we are in the country. So we're in southwest Ecuador. We're right on the coast. We're very fortunate to have excellent infrastructure around this project. Unlike a lot of the porphyry systems you'll see across the Andes, we're low elevation, we're not high elevation. We're very close to this Porta Boulevard in the top of the map you see here. And the reason that's helpful is it's where we would ship our copper concentrate out of, and it's where you could bring in construction materials. We've got power to site. We have ample water there for an 80,000 ton per day operation, and there's no communities directly on the deposit. There's an airport in Santa Rosa, so this is about as good as infrastructure as you're going to get. The most common questions we get on this project is, you say it's big, how big is it? Well, it's the 37th largest primary gold asset in the world by resource size, and it's the 14th largest undeveloped project by production capacity. People say, what about the grade? So it's a larger, low-grade system, but the grade works. We've seen similar projects being built around the world, and we typically think of this more through the copper lens. So think of it more like a copper porphyry with these large-scale daily tonnage throughputs versus a smaller conventional gold project. So if you flip it over to a copper equivalent for a second and think about it that way, it's about half a percent CUEQ, and that's higher grade than Cobre de Panama that First Quantum built, Mount Milligan, which Centerra is operating, and similar grade to Red Chris, which Newcrest is operating. So that we know the grade works. What about the CapEx? Well, it's about $1 billion to build this project, and we've seen 2 projects now with similar amounts of capital built in country. And stage, lastly, what stage is it at? The Cangrejos, the main pit, is at a PFS level. Our satellite pit was a little bit behind, which is why we elected to do an updated PEA instead of a PFS on the project. But it's been advanced in many ways, substantially past the PEA, and we think it's been de-risked as much as you'd want to. Here's a picture of both the deposits at the project. So you've got Gran Bestia in the top there, Cangrejos in the bottom. Both pits are open to depth. The holes ended in mineralization. It's also open to the northwest there. We stopped drilling on a ridge line, which I'll show you in the next cross section, but you could keep going in that direction. And it's also open to the southwest. So here's the 2 pits you can see in the blue outline on this slide. The gray outline was the old PEA. The blue outline is basically the new PEA. You can see off on the left here, there's this northwest area. That last vertical hole is where the resource model stops. But there's really no reason to think the mineralization doesn't keep going. We just had to pick a cutoff point there to stop our drilling. So a quick summary of the PEA. As I mentioned, for $1 billion, I'm in the bottom left here on the capital side of things. For $1 billion, you could build a 40,000 ton per day operation. Then you would organically fund expansion capital, another $500 million, and by year 6, you'd be operating at 80,000 tons a day. And once you're at that level, you'd be just under 400,000 ounces of gold a year and just under 50 million pounds of copper a year. Cash costs, at $600 an ounce, there's some things that are driving these low costs. In Ecuador, you've got cheap hydropower at 7 cents a kilowatt hour. We're close to all that infrastructure I mentioned. And you've got a great strip ratio at this project. This is an important fact that a lot of people miss. They'll look at the grade and they don't think about the holistic economics of the project. The strip ratio of this is about 1.1 to 1. So you're not moving very much waste to get at the ore. The deposit comes right to surface, and that's such a key point. Economics, about 16% IRR at $1,400 gold, 22% at $1,680. So what we try to impart on people is this is a unique project. There's not a lot of projects in the world that can produce over 250,000 ounces a year. Cangrejos is the 14th largest in general, but it's the 5th largest that's held by an independent developer. And so the blue bars here are owned by majors, and we really think that as majors are continuing to look for reserve replacement, they'll have to go to these yellow bars, and that's where Cangrejos is well positioned. The last one of the last things I'll talk about here is valuation. We think Ecuador has too large a discount in the market right now. We think this is an area of opportunity for people. The Western peers traded about 0.6 on a price to NAV multiple. Ecuador seems to trade around 0.35. We think that discount's just too big. We know it's a new emerging jurisdiction, but it should be a smaller discount there, and we think this will true up over time. Lastly, and this year this has been emphasized how important this is. We do a lot of work in the community. We work to reforest around our project in areas that have been previously cleared by cattle grazers. We work in the schools on education programs. We work in the community on entrepreneurship and building up local businesses. And obviously with COVID this year, the health initiatives we've been taking around monitoring and prevention are so important, and this is an area that Lumina focuses on, and we think this is crucial for when we move the project or continue to move the project towards development. So in summary, since the 2018 PEA, we've drilled about 40,000 meters at the project. The 2018 PEA showed the project works at 1,300. We think we've dramatically improved it since then. We've doubled the resources. We've improved the metallurgy and flow sheet. We've enhanced the engineering at the project. And the new economics are fantastic. So at 1,400, a $1.6 billion US NPV, a 25-year mine life versus a 16-year mine life. So a lot of improvements. I'll end on Lumina Gold with the note that the team has a great track record of monetizing assets. We're going to look to do the same thing here with Lumina Gold. The plan is not to build the mine. The plan is to sell the company on to a major that is looking to build this. So with that, I'll end on Lumina Gold, and I will quickly touch on our sister company. These are all assets that used to be inside Lumina Gold that we've now spun out into our sister company, Luminex Resources. It's also an all Ecuador-focused company. I would encourage you guys to take some time and look at this as well. Condor is our main project. We have about a 5 million ounce gold project there. That's where we're currently drilling. We have 2 exciting partnerships with large major copper companies, and they'll be drilling those projects in the next 6 months or so. We have BHP working on our Tarki asset and Anglo American working on our Pegasus project. Between the 2 of them, it's about $100 million US of commitments to advance these projects. So I'll leave it there on Luminex, but I would encourage you to take the time to look at this asset as well. So thank you for your time today, and I hope you have a great one-to-one conference.